Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with our pre-market forecast for today, Friday, February the 28th, last day of the week, last day of the trading month, and absolutely incredible month we've had here towards the end. Quickly, we jump to our news items. Today we have at 9:45 the Chicago PMI, really important report. Keep your eyes open on this one. It moves the market way before 9:45, so keep your eyes open for that one as well. Let's quickly jump to our analysis here, and we're going to go to our daily chart here first. Let's jump to our trade chart. Where are we? Oh boy, here we go. Give me 1 second here. I got the wrong chart on. Here we go. Let's go to our daily chart here, and as we can see, this has been a dramatic and drastic bounce off. This is a tremendous correction coming off the all-time highs. We can see the market has penetrated through the 200 SMA, through this trend line that we had here. It was holding since, let's say, way back in June. Market's clearly broken through. Now, remember that this run that we're dealing with right now, this run was the huge retracement from the beginning of the run that we had way back here in February 2016. Okay, this was 2 years ago. 2 years ago, we began this run. We had this huge correction. Now, from this correction, which we started to recover, remember it was late December of 2018. Remember, this is all 2019 here. Remember, we had a few retracements, but we had an overall up market till the all-time high here in mid-February. Okay, so if we take that run into consideration, we're currently at a 50% retracement. Okay, from this run to this run, obviously we blew through that one. Right now we're at a 50% retracement. The market could potentially retrace all the way down to the 61%, which is right about here, which would be the support that we established way back here as an anchor to our trend line. It could be right about here before the market stops. Now, I am not saying that the market is going to do that, but we've been calling the 80 SMA, we've been calling the 200 SMA, we called this trend line. Now the market is below the 200 SMA. You know what happens? The markets do not like to be below the 200. And we were there for a while. Late last year, remember, in October, we were under the 200 for quite a bit, remember? But eventually the market recovers. So the market doesn't like to be around this 200 for very long. And you can see historically how the market just bounces off this 200. You see, it went way below here, but eventually it recovered, came back and retouched. So markets do not like to be under the 200, because under the 200, it means that we went from bull market to bear market. But we have to trade what we have in front of us. And right now we have a market that's totally determined on continuing down. Therefore, that's what we need to trade. Of course, once we find a solid bottom, we start quick recoveries, then we can actually do some counter trading, but it should be far and few between. Your trades should be with the momentum, with the direction of the market. Counter trend trading doesn't work very well. So keep your eyes open on the short stuff. And here's the big picture coming off the all-time highs, straight down shot to the downside. We have this trend line here that's kind of keeping the market down. As long as the market remains below these levels here, as long as below this level here, we're expecting more continuation down. Now the market can retrace. You can find a bottom down here, and it can retrace and come up further up. But that can happen, because you remember it happened yesterday. It ran up, it runs down, it runs up, it runs down, it runs up. So it can happen. The thing is, keep your eyes open for these key levels. This is a key level. The 200 SMA as resistance is a key level. This trend line here is a key level. Here, these trend lines that we're drawing here, these are not based on speculation. These are based on objective analysis. The market provides the opportunities for us to identify these areas. So we like to keep our eyes on these areas because they're very important. Now let me go to our trade chart here so that we can see where we're going next and what we're expecting here today on the short-term basis. We are right here. This is our trade chart here. Again, we are definitely below yesterday's intraday low. This was intraday low yesterday, so we broke clearly below there. Clearly below there with a lot of activity. Trend line that was broken to the upside. The market uses it as support. And now the market is behind this new trend line that was born, and it looks like it wants to try to do some sort of retracement back to this area for potential continuation down. We got to keep our eyes open for that particular activity there. So that's kind of like the compression that we're seeing right there. Keep your eyes open for that particular area there. That's our immediate area. Our immediate area is that one there. Once the market continues, if it in fact does what we're expecting it to do, come back here and then retest the area and then potentially run, then the sky's the limit. The sky's the limit. We have a lot of potential areas for support where the market can come before it decides to do anything else. So this is where the first battle is going to be won today. It's going to be in this area here. Once the market decides the area there, any break through this area or any break through this area, this is the only way that I will go long, would be a break to this area above here towards the intraday low. In fact, and other than that, if the market breaks here, I'm expecting the market to come retest this old trend line and potentially move lower to this level here. So that's the play for today. Be very careful. Very tricky markets.